fire now is closing in. to bear and nothing to win, nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Fire, take my hand, I'll take you higher than you've ever been, you've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day. We'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. So Bitcoin getting a rejection off of the top of this regression trend channel that we were in. Also a little mini volume node of this range slash point of just shy of the point of control, but a high volume node nonetheless on the Coinbase chart. Are we going to see a deeper retrace into the next, go back to the point of control here in the consolidation range and make it all moot point? It also happens to be a rejection off of the equilibrium of this diagonal pitch fan we've had price in since January. That's been treating these levels quite nicely. So we're getting a rejection off of that diagonal pitch fan to the upside. Interesting to note. Do they want to take it back down into some discount regions? Let's take a look at the liquidity on high block. What is high block? Well, That is when people lock their liquidity in the charts to get burnt to a crisp by the market maker for not using a stop loss. And we get to see where those crispy characters lie in wait. So as we saw this on the 1 minute time frame, we were seeing these small little short pools develop, and the move started to take its time, and they came back into these $182 million pools of 25 extras with a fury up at the 30K region.
Fatality.
And shortly thereafter came down into these 100x pools. As we were coming up into this region, we talked about possibly coming down into these 100 xers, and they do come back with the fury. They don't let them stay in profit for long. So it looks like we're coming down to that 29517 pool we pointed out yesterday, and could be potentially going lower.
Fatality.
And let's go take a look at what is being induced into the charts at the moment. We got $88 million short pool opening up here into the breakdown here, as opposed to nothing being induced in the longs, as they are scared and trapped from over here from whatever YouTube streamer told them they were breaking out to the upside. They got trapped into their longs up here along the way, and they hook, line, and sinker them down below to their demise. And the trader group will most likely say, oh, don't be negative on yourself and all that stuff, as they sent them to their demise. Are we going lower down to the 29204 region and beyond? Let's find out as we expand our vision to the higher time frames. Okay, so we cleared the 7-day pool completely almost. So the 7-day pool imbalance to the upside is nearly cleared, unless we're making a larger shift to 32K, but I don't think that's likely yet. I think we could possibly clear out, sweep the lows one last time for that to occur. This was maybe just a sweep of the shorts for that more solid leg down to the 28K range, perhaps. Let's go look at what lurks below on the 7-day as the imbalance now shifts to the downside. You got billion-dollar targets all the way down to that 28.6 region on the 7-day, so they could just keep sweeping all the way down to the lows there. If you go to the monthly time frame, let's go ahead and take a look what lurks above, because on the monthly time frame you still have that hot region up at 32K, the $16 billion. But we've also been talking about how that has been percolating on the higher time frames as well. So if they came up to this region, is their intention to reprice higher to grab those shorts? Let's go ahead and expand our vision to the 3-month, make sure everything's copacetic. 3-month building that 64 billion narrative up at 32K, but also has all those nice pools lurking down below. Imbalance is clearly to the downside in terms of amounts of liquidity. Same with the 6-month, as you see these large amounts lurking down below, and the shorts having also the 100 billion plus pools all the way up to that 33.6 region. If we expand to the 2-year time frame, you can see that there is nearly 600 billion and beyond up to the 33.2 up here. So at some point mustering the strength to come up to 33K will be in the cards, but are they going to sweep some of these lows to get the strength to do so? At 30,400 you have 52 billion, 30,800 you have 52 as well, double 52 billion pools over 100 billion up to the 31K region. Do we continue higher? That is the question on everyone's mind. Let's go into the 1 month one more time and see, because this paints a picture of both sides quite nicely. You do have those $13 billion pools up at 30,005, 8 billion at 30,006, basically $60 billion up into that 31K region. So coming back into this as opposed to going lower right now could be in the cards. It all depends on how many 50 extras they look to stop out. So this is where we look at this, and you got 10 billion in long liquidity, which they could retrace into, and oh, they got their target filled. Oh, not quite yet. We'll see this probably taken out by the time the stream is over, if not right now, actually. 524, they're right on the precipice of liquidating this guy from yesterday. Now, it's not one single guy. I like to group up the traders into a bubble and call it a guy, but it's a group of guys that decided to long 100x into this and hold it for whatever reason. So they're going to come back to them and say, no, 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 that's not how we operate. You got to pay yourself, and they're going to liquidate this pool. This is their liquidation point. Where they actually opened it was at 29,719. So they're experiencing drawdown for not paying themselves for whatever reason, and they were given a chance to break even here, didn't take it, and they even got profit and they didn't take it, and now they're coming back to liquidate. The greedy ones. And it looks like they got liquidated.
Fatality. And that's what happens.
Oh man, why are you gonna liquidate my position?
And yeah, that's what happens when you don't pay yourself. The 153 billion repossessed by the market maker. Thank you. Play again. Insert token. And as they do that now, you do see these shorts starting to open. $88 billion pools. We had, or million rather. You had these 72 million that started the journey up here as they were having that less interest generated down below. The more interest they generated in longs, the more they become targets and dead weight to the side of their trade. So let's go into the Binance chart and see what's happening in the charts and the Fibonacci. Okay, so we'll remove this. This was the cloud shifting on the 8-hour that insinuated the upside that we didn't look deeply into enough. So we got that take profit level. Hail Mary hit on our charts and rejection off the 236. This is a continuation idea of this bearish trend-based fib level of this range. They never cleared the 236, which means the bearish trend-based fib is still in play, but this bullish one played out in its own right. We came all the way up to the 1618, and you would have been able to take some nice profits on that. So we can exit that idea and look at a retrace inbound for a potential long. If there ever was one, there would be an order block presenting itself off the golden pocket at the 29.23287 region. Let's go ahead and throw on our oscillators and see what's going on in the charts. Boom. Link in the description for more. MomentumMaster.info. Scroll down to features and turn on the toggle switch for all of this, and then also hit the components as they come into prominence as we look at them. On the 6-hour time frame, you did close the 6-hour candle above that cloud. That is a structure shift in terms of seeing this cross-up event. If you took this at face value, you could have considered going long here off the cloud shift and the thinning of the cloud and the reclamation of it with that cross-up event. The cross-ups and the cross-downs are not to be ignored when they do occur. They're worth noting, and especially if the candles close above the baselines. What are the baselines? Well, they are your first sign of reversal. The baselines are one of the few leading moving average formulas you will find in the market. So this is why you take note on these higher time frames. So we have yet to see that rejection, but we are most likely getting it on the hourly time frame now. That was a top that would have seen here. You see the cross down event, the candles holding off this level, and that's your standard typical M pattern to the downside here. Rejection off the adaptive. We saw that rejection yesterday too. We saw that rejection here on the first hit. We talked about that Hail Mary hit to the high. We got a nuke at that time, and then we also got a nuke the second time just a moment ago, talking about that second hit to the high. So if you just take the signals as they present themselves, the nukes are pretty powerful on Momentum Master. What are these nukes? Well, they are a never-before-seen formula which simultaneously monitors more than 7 time frames of information, so you don't have to, over 32 different indicator values. And you can get those dynamic alerts. We did see those 6 time frames over bot message to our phone, which is why we posted this at that point. So if you were so inclined to take the short, you could have taken that short for a good 2% gains. There were a lot of longs building there, so it makes sense that they would fake out breakout and take them to their demise. The cloud is thick here, but we busted right through it, and we busted right through super trend, showing that this is a fake out potential before the CPI tomorrow. We have some news inbound, news play inbound, and we are now reclaiming the 0.65 706. If the 706 at 29,431 fails, you could be falling down below and the trapdoor opens, and then you see what the reaction on the 618 will be. And that is the Fibonacci. So let's go into the daily time frame, take a look at what's going on there. 2 stabs, tweezer top potential off of the trend cloud on the daily time frame, which is still bearish in nature. You have a blue vector candle on the daily insinuating a stop hunt. When the vector is not green, that means the volume did not follow through. It just went up enough to stop out people. So this is what they would call a stopping candle. When it's blue or pink, these are stopping candles. See, notice how the pink candle goes down here and then it continues higher. But then you got a blue candle here, not a green follow through, so that was also a stopping candle. Stopping candle, stopping candle, reverse. Stopping candle, reverse. Stopping candle, reverse. Stopping candle, reverse. On the daily time frame, something to note: if they're not green vectors, then they are stopping candles. On the PVSRA strategy, you'll notice Tino goes over this, but it is not his original idea. The PVSRA candle strategy can be looked up and seen. It is something he adopted, as well as myself, and the PVSRAs are quite nice to notice the volume entering and leaving the charts. Vectors are a thing. Okay, so if we start to drop down, actually let's see if we have any confluence on the 3-day or whatnot. So the 5-day just closed yesterday. So we had the 5-day close in a state where it started to flip the KD lines and stabilize here for a potential push up. With a potential push up on that time frame, you're getting the money flow. You had some hidden bullish on the money flow, triggering a stop loss hunt for 15 days, and you're starting to see the money flow back in potentially on the 5-day time frame. Takes a while to play out though, so we're just chilling. Daily time frame starting to also get a rise here above the 50 level. Are we going to see that continuation of the golden light of the rising sun or not? That is the question. We're not necessarily sold on the idea of the long. This looks like it could just be a stop hunt for a continued leg down. Let's go ahead and take a look at the lower time frames, starting with the 22. If it were to continue to the upside, here's what you would like to see. This is starting to present itself in the nature that we talked about always, which is when you have a breakout of a cloud, you come back to kiss the cloud before you continue, if you are going to continue, and you start to see that thinning nature of the cloud presenting itself in a manner here. And you would see that thinning of the cloud as we saw here. Here was a rejection, the opposite of what you want to see for a long, and this was a good confirmation of what you would see for a long. And so if you missed this, you could see a confirmation potential at the golden pocket region here off that also coincides with the cloud thinning and starting to shift to the upside. Now there hasn't always been this steady thinning and shifting. There's been fake outs on this as of late, but when they do play out, you do see some interesting potential of that thinning out nature. For example, here you came up above the cloud on the 22, it started to thin, and boom, you saw this potential to the upside. Are we going to get a play like that? I have no idea. You just got to be ready and see if that's where these levels coincide. Let's go ahead and see what type of liquidations exist down in that region. You got that $153 million pool at 50x down at the 29,204 region. That would clear all the way down to here. There's still thick pools down here at 29 even, 151 million in 25x. Do they satisfy did they satiate their appetite down at the 50x down at that 29.2 region, or do they prefer to deep retrace at the 706 and the 786? And that's what essentially Fibonacci is about. It's about how deep of a retrace to satiate the over leveraged, and that's where the bullish order blocks get filled if they exist to begin with. Let's start to drop to a lower time frame real quick. 12-hour cloud also shifting in similar fashion to the 22, however getting a rejection off of the super trend established in the bearish form from July 24th, getting those wicks to that region. So even if you don't know about these bearish trend-based fib lines or daily support levels, the super trend has you at hello. This is why we have it in our suite, and why it's important to also only note a percentile and not buy or sell. We don't want to install a bias. We want to show you how much you need to reverse the trend. That's it. Make it mathematical in nature, not emotionally charged in nature, is the way I look at it. So you have to go up 1.4% to reverse this trend now and hold candles above that level for the bullish one to form. So as it stands, we are maintaining this super trend to the downside on the 12-hour time frame, but coming down to this thinning cloud and that golden pocket could be something to note, as we do have the cross-up event still in play on the 12-hour time frame. Let's go to the 6-hour candle closing in 49 minutes, similar to last stream. I think this will be a nice time to stream. It is 2 a.m. my time, but I do a nice thorough session of the NASDAQ and call my family members in America and all sorts of other stuff, so I am indisposed a lot of the time. Sorry if I'm keeping you waiting. There are times that present trades sometimes around these after London close times when all the streamers go offline, so it might be a nice hour to think about streaming. Let me know what you think. So going at the 6-hour time frame, this is starting to reset here. We were extremely overbought, hence the nuke appearing on the indicator here. Seeing that nuke appear, it didn't lock in, but it did flash briefly, and the one that did lock in, I'm not sure why it erased itself from here. I don't know why that happens sometimes. Sometimes it remains, sometimes it erases. It might have to do with the next time it appears and flashes, and if it flashes too much, it deletes the previous one. It's something to do with the math. When the other one appears, it deletes the old one, and if it flashes too many times, it might delete too far back. Either way, so on the 6-hour time frame, we're getting that potential reversal of the stochastic potential. Also this 200 weighted moving average, we attempted to hold it for 18 hours, and now we're seeing this solid break to the downside. The volume also confirming with the vector candle here. You got that green vector, the stopping volume, which was the first hit to the high, and then you had low volume, and now you got that stopping volume turning into red vector on the 6-hour time frame. Let's go to the 4. So when you have volatility, you have much more information to read and adapt and do on the fly. This kind of trash consolidation for 2 weeks is so boring, because it's just gobbledygook on the oscillators and gobbledygook on liquidity and just gobbledygook on the cloud. When you have this, you have much more traditional TA concepts to work with. So if then, and it's much more invigorating to watch. Even though I didn't take the trade, it's much more exciting because it's doing something. It's directional. This is what NASDAQ does all the time, which is why NASDAQ is more interesting right now for me to trade. Speaking of which, there is a link in the description for evaluations for Apex and Bulanox if you are so inclined. They do expire in a day, I believe. You have about a day to get 90% off those if you want to take it. Look at it like a game trader simulator. Looks like the 4-hour cross-down event could be playing out as well on Bitcoin if you get this candle to close in the next 2 hours 46 minutes beneath this baseline and they start to cross. Something to look out for unless you're starting to do this meandering consolidation game again. But when they do cross up and price closes above it, then you can look for more upside. If candles close beneath the baselines and they cross down, same thing ensues. So something to look out for as we experience alarms and the leading MACD cross down event on the 4-hour time frame. We could see this hard reset of the 4-hour as well as the 6-hour, because if you negate this entire play and you still have more momentum to the downside, then you could break these and come even lower to these regions here that we outlined before the break to the upside. So there's all these if-thens to think about depending on how the oscillators and the cloud treats you. The 4-hour cloud is thick in nature, expressing volume, series volume that entered here with the PVSRA green vectors. Here you have 1, 2, 3 vectors. Normally you have the 3 vectors, 1, 2, 3, plus a stopping volume, purple, boom. That's a very textbook. 3 vectors plus a stopping volume equals reversal. Something to note, 3 vectors plus stopping volume candle equals reversal a lot of the time, for at least a little scalp that you could take. This is a 4-hour time frame too, so those green vectors are no joke. So seeing green vector, green vector, green vector, purple stopping volume, reversal. Rip back to the downside, M pattern formation, daily resistance level, range high, 236 of the trend-based bearish fib level. Yeah, there's a lot of confluence that's stacked up here with the nuke on the oscillator. It's all about pulling the trigger if you are so inclined. So the 4-hour time frame will close in about 2 hours 44 minutes. So we got time for that to occur. Hourly time frame ripped beneath the, let me just take this off. I don't want to install any bias. You got the idea. The golden pocket is important to look at as a prominent idea. The cloud on the hourly appeared to be strong. The angle started to taper here as it created its rip to the downside. Are we going to see a bearish retest and drop? Generally, you come back to recover 50% of that at least. Is there any liquidity suggesting that they could? You do have 88 million of 100x shorts up at 29,700 even. That would put you just at the wick here. So recovering part of this vector candle coming up potentially and then coming back down further if that's what we intend to do. Wait a minute, why is it not deleting? Okay. So the hourly play, let's take a look at the hourly. See, the hourly play also had bearish divergence as you went up into here on the RSI and the money flow. We had bearish divergence, and that started to play out. Cross down event of the alarms on the Williams, backtestably true. You get false alarms, but when they do finally come to fruition with some other confluences, then boom, it does reset. You're starting to get a reset of the Williams on the hourly. You could get an hourly play at some point in the near future if it doesn't rip completely to the downside. If that makes Thursday is just around the corner for me in Asia. You're going to see more of these close because as the candles get smaller in nature, they lock in these stochastic levels. And the beauty of these things is they're not false signals, and they're not repaints, and they're not fake. Basically, this is when 5 time frames are overbought, and this is also why you would be, if you're new, how you don't immediately jump in when you see them is when you are breaking structure. I repeat, when you are breaking structure, and this means making higher highs. So you want to have the higher high and lower low look back on to to tame your inner immediate shorting idea. This higher high and lower low look back will save you a lot of trouble of entering a short just willy-nilly off these signals. If you're inside this higher high and lower low look back level, and then you get the signal of 5 time frames overbought and you don't break the higher high, then it's pretty safe to take a short at that time. But also most likely at least 2 or 3 hits to that high attempt, and then it's a safer bet. Trying to expect a V shape into these signals when you're breaking structure and going into higher high territory, not smart. Now, if that starts to lock in on a higher time frame and you're not doing that with the higher highs, like here, you got the 5 time frames overbought that locked in on the hourly, and you didn't make a higher high on the hourly time frame. So that was also a confirmation of a short. Now, if you go to the 4 hour, did it lock in on the 4 hour? It had a 4 lock in, and as you see, the higher high and the lower low look back goes over to this range. So that would have told you potentially you could take that to the downside too. And when these lock in on these higher time frames, they do start to express themselves. Let's say I take the 5 and above, and you'd want to see that realistically speaking on like a 6 hour plus time frame. If you get like a 6 hour candle with like a 5 or a 6, similar to here, when you had a 4, you get a steady like 2-3% out of that play. So that is something. Originally when I was back testing this, I was like, how can I avoid the false signals? But they're not really false, they are actual overbought, but it's when it gets suppressed. And I use the structure of the higher high or the lower low look back. I don't need it, so I don't turn it on myself anymore. I know when we're breaking structure, for example, when we started to get above this high, that's when you need to take heed. But even realistically, when you're getting above these vectors, then the repricing is real, and you should wait for at least confirmation of a second hit, which is why we gave that first hit, second hit. And so the second hit would have been a really nice thing to think about in the future. Ideally 3 hits is the more surefire method. You get 1, 2, 3 hits to the high, sharp reversal, 1, 2, 3. So the 3 hits reversal idea. All right, so going back to the hourly time frame. Hourly time frame closing obviously at the end of the hour in 38 minutes. Had that bearish divergence play, the Williams resetting nicely. As we go to the 15-minute railroad cross tracks, and that suppression of that 15-minute cross down event. So if you were scalping the 15-minute and you were looking for that entry up that 2 hits to the high, seeing this cross down event potential, this is why we bleed our candles of the color of the opacity to see this in prominence, to see the candle closing beneath, bearishly retest, and boom, rip to the downside. So this is why you see so many of these 5s. They're not false signals. This is how many 15-minute candles closed with that overbought status intact, and you want to look for that elasticity of that stochastic suppression locking in on a higher time frame, like the hourly, the 4 hour, the 6 hour. It's a time frame permeating formula, so it doesn't matter what time frame you're looking in, but it will lock in on that candle close with the reality of that across the 32 different indicators. So I like having the history on myself because it gives me a narrative of how much they pushed through that overbought status. And eventually, after not making a higher high, the overbought status got too much and needed to reset. And it reset with the fury to the downside. And let's see how much further down they want to go. All right, so 15-minute reset here, attempting to take off. Williams also oversold. MACD coming down to the 15-minute for that wake-up call potential. When you see the MACD, leading MACD, normalized MACD in actuality, coming down to the Williams domain and saying what's up to the Williams with that double bottom fertile crescent with the rising sun potential, you could be seeing that 15-minute bounce-a-roo in conjunction with the hourly at some point. Now, if this lines up with a level, like for example, yesterday, so we can take our Fibonacci. Normally, a typical retrace is, everyone talks about the 618 golden pocket, the points institutional ideas, 0.65 or 66 in Forex and stocks. That's why we got these purple ones here. And deeper retrace at the 706. Now, if I switch this over, you can see the deep retrace area at the 786 and the 886. This is a weaker idea for a long, but sometimes if there's more juice, there's more over leveraged people, they might deep retrace and shift out too. Now, if it's more bullish in nature, you'll see a reaction off the 0.5 equilibrium. What is equilibrium? Well, when you're up here, you're at a premium. We went over before in the past, possibly premium versus discount. Premium prices, you don't buy a car as prices increase, you buy the car as it's discount and cheap. So when it gets to that equilibrium price, then potentially you could buy there. Now, most people aren't that impatient, but if it's extremely bullish conditions, then that is your shallow retrace. Now, the pocket is the ideal one for most traders, so you could see at least a small reaction off the 618 at 29,287. The liquidity also suggested that the 50xers do taper there, although you have this steady amount just layered throughout this region all the way down to the 28.2 region. So we'll see that reaction as it occurs. I'm more interested in seeing my level hit for the long idea setup for the swing long. This was not really a swing long level for me, although a lot of YouTubers might be telling you otherwise. They're just trying to trap your liquidity perhaps. I often wonder like what they talk about in their secret YouTuber Telegram group when they organize their Pepe pumps and all those weird meme coins. Just quite odd to me how much of their insider information is manipulating the markets. I know for a fact that you have shady characters out there that have their, their own coins and stuff, let's say, that kind of do some nefarious things with that. But that's another topic for another time. So looking at the 4-hour cross down event to occur with this close in 2 hours 33 minutes, a lot can happen in that time. The 6-hour closes in less than 30 or almost 33 minutes. So if this 6-hour candle closes in this state with the red vector, you could be seeing some downside occur. The baseline still technically holding, but that red vector, that bearish engulfing of these 3 candles here and retrace into almost the complete recovery of this vector is also not so good for a long idea. You'd want to see it hold and reset the stochastic if it was truly going to reprice, let's say, up into the regions up here. If it were truly going to come up into these regions, then you would be seeing it hold a region, particularly above the 236. It can't even get above this bearish 236 level at 30,107. It got 2 taps and rejection, with the volume also tapering out on the cloud on the daily. Not too keen on it personally, not too keen, but I'm always open to be wrong. I was wrong about it bouncing off this level here, and no harm, no foul. I wasn't in any trade. I'm still waiting for my levels to get hit for a swing long. And the 236 level for a long would be this level here at the 30,724. We get above that, then we're basically kind of potentially coming up to the 0.65 at least in that 33K region for those $600 billion in the external liquidity range. Now, I think we got too much down below, so we could be getting heavy, and this was just a stop loss hunt to the downside. Let's go into the 4-hour. We're just going to see how this 4-hour, how does it react? So the question going forward into the next 2-3 hours time leading into the daily candle close and whatnot. Do we fall back into this range? If so, do we have a reaction off the golden pocket at the cloud here? It's the 4-hour cloud. It's also the shifting cloud on the 12-hour. We had a 12-hour shift, right? So this 12-hour shift in the cloud also leads to the confluence structure of that 618 bounce. So if we come down into this region, do we see a reaction off of that? If you do, you could lock in some gains and leave the stop at break even and just see what happens. Or keep your stop real tight, or just play it where if the candle starts to bounce off of it, lead into it, because it could just rip right through it too. I've seen that happen before. So if it's truly bullish. Also with the V-shape, like normally you'd like to see, if it's bullish, it would be like going something like this. It would make a slower retrace in and then dip out. So if it's just a single candle, like just single candle straight down, then it could just be a deeper pullback in general. So seeing this candle somewhat hold and then retrace back up into this region, for example, and then come down and react would be more steady of a play. These V-shaped ones normally could rip right through it like this one. So be careful either way. I'm not sold on this level, but I'll be looking for a reaction nonetheless. I'm more interested in seeing what it does on this 618 of this entire impulse here. You could even deep retrace it down to here, and that's where a lot of people, I heard some people mentioning 27K, so that could be why they're looking at it there from that idea. But I'm looking at it from this impulse here, and that coincides with the liquidity and this point of control from this range here, the 60-day range. So there's a lot of confluence leading to believe that it could SR flip this point of control and the liquidity and find some bounce there. So it's about finding confluence on confluence and building a narrative structure that makes sense. To me, this just didn't make sense, so I didn't take it. And like, even more so, I'm not FOMOing, so I'm not interested in taking that. But maybe you have a different trading style. Maybe you're into like scalping the 15-minute. Maybe you have more time to monitor it while I'm working or with my kids or whatever. So I can't give you signals. That's why the indicator is quite nice, because you can be your own guru. You could take these dynamic alerts on your own and see the stochastic array setting up these signals on their own. And that's the idea. You can see it not making higher highs on your own. That's the general idea, and not having somebody whisper in your ear. But this is a pretty nice whisper, the nuke and the not getting above the range, you know. Can't make it more straightforward. I wish there was a better way. I'm talking in talks with the roadmap on building a bot, but that's just the first stages of this, so I can't really talk more than that. So either way, yeah, the 618, what are we going to do here, and what are we going to do if we go down below? And that's my story, and I'm sticking to it. Well, see what's up in the chat. What's up, 𝗦𝗲𝗿𝗀𝗁? Long time no see. I like the icon. What's that icon? Looks kind of like an AI generated image or something, but it's cool. It's dark. It's very like dark, like goth style. So yeah, coming down to the 618 here, what's the reaction off the liquidity on the 150x pool that we just outlined for you? If we break that and not have a solid reaction off that, then coming down to the pools listed below on the bearish trend-based field, the Hail Mary from that time. We got the Hail Mary on that small impulse, so do we get the Hail Mary going forward? I just thought that was cool that we had this rejection over here. If I go back to the Coinbase chart really quick, I'm gonna turn off the oscillators and just show you that rejection off of the diagonal fib level again. It happens to be this trend line of the regression trend as well, but these things just they react in strange ways sometimes, and it doesn't look like that on the daily time frame, but if you go to like lower time frames, you have these weird reactions off of them. People call them spider lines or whatever, but it's just math. It's just taking the angles of this and projecting it out in the future in a mean reversion path, with the mean being here and the 236, 382, 0.5, 618, 765, 706, and so on being in this projection path to the upside on a bull trend. But we noticed it back in January how the price got trapped in here, and it was honoring these levels and coming back down and rejecting off the 0.5 and coming down here. And we just noticed it capturing it and getting up into the 0.65 and rejecting, finding equilibrium and dropping below to discount, almost coming back to the mean reversion completely. So it's just been very fascinating. I've had it captured in since this liquidity grab here. So yeah, coming back to this, we had that nice smooth rejection off of the 0.5 of that equilibrium, suggesting they want lower prices, and this was just a confirmation of that, stopping out the shorts to come get some equilibrium down, some discount prices down below. And that is my story, and I'm sticking to it. Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same. Bringing the fire, the accuracy, the precision, all that fun stuff, and we'll catch you on the